best minds and create the most value for its clients, it is time to step up to the plate and set our sights on changing the world for the better. I argue in this book, and believe I have ample historical justification, that asset managers are the ones who shape the face of the world for decades in the future. This proposition might seem far-fetched to you, but keep in mind that without smart capital allocators competing to find the best, most useful ideas, there would be no innovation. The world has changed a lot in the last 30 years. I graduated from one of the finest schools for environmental sciences in the world, ETH Zurich, in the mid-1990s, trained as an environmental chemist and ecologist. At that time, I couldn't find a job in my field, but was lucky to get hired as what was then the obscure position of sustainable investing analyst. The fact that I stumbled into this position at the time led me to get both a master's and a doctoral degree in finance, and then to pursue a career as an asset manager for almost 3 decades. At the time I entered the asset management business, the world was agog over the possibilities of a crazy idea, born in part in a Swiss laboratory at CERN called the Internet. Everyone was going nuts for anything.com, and no one cared about environmental degradation and climate change. Nowadays, the situation is different. There is high demand for talent in ESG, environmental, social, and governance issues, a trend I'll have plenty to say about in chapters 13 and 14. While my views on ESG are nuanced, I believe the emphasis on sustainability is entirely justified and proper, considering where we find ourselves vis-à-vis the dual crises of climate and biodiversity loss. It is my opinion that as an industry, we must do more to identify the best and brightest candidates, and to take great pains to nurture them as the colleagues who will be instrumental in shaping the world of the 21st century. Considering the serious issues we face, the success of this cohort of asset managers may even play an instrumental role in determining the fate of human civilization. This book aims to equip novice and experienced asset managers, as well as interested stakeholders, with a conceptual framework, one based on the core principles of financial intermediation, that goes beyond the current and stale dichotomy between active and passive investing. I have organized the book into 4 parts. Part 1, chapters 1 through 4, provides a thorough explanation of the larger ecosystem in which asset managers operate. Namely, in Chapter 1, I offer a high-level map of the ecosystem and follow up by discussing buy-side, sell-side, and other players in Chapters 2 through 4. This part of the book is likely to be most helpful to students, asset managers early in their career, and politicians and journalists. But my guess is that more seasoned asset management professionals will also probably pick up a few tidbits listening through it. You will be able to follow the reasoning and enjoy the topics in subsequent sections of the book without listening to Part 1, but you will have a better grasp of the nuances behind the arguments if you understand my map of the industry and how each of the players fit and sometimes meld together. Part 2, chapters 5 through 8, describes the conceptual framework that now governs the industry, especially the drivers that have channeled everyone's attention into a debate between active versus passive. Chapter 5 offers an overview of fees, size, and competition for investing talent, and the rest of the chapters in this part take a closer look at the interplay between these drivers. The last chapter in this part discusses the active-passive dichotomy, and why I think it is at best meaningless and at worst value destructive to the asset owners who have hired us to manage their financial futures. Part 3, chapters 9 through 14, introduces my preferred framework for conceiving of the asset management industry, based on the principles of financial intermediation. In this part, I make the point that there is a good reason for people to have spent so much intellectual time and horsepower rehashing various points related to active and passive investing approaches. Both active and passive investing styles exist in a world of intense competition, so they must have some characteristics that confer evolutionary advantages. Therefore, I look at the characteristics that make each approach attractive from a financial intermediation point of view. These characteristics